Okay, so let's kick it off, ladies and gentlemen. I'm going to just do a screen share because I have a mini agenda. I'm not sure if anyone saw it. This is something which is very near and dear to my heart and very exciting as well. We're talking about fundraising for VR. I'm thinking about starting to call it metaverse. I haven't really jumped on the metaverse bandwagon, but it does kind of make sense. And this is a quick overview of the agenda. I'm going to talk about the vision that I have in mind for these sessions. This will be the first of hopefully many or more than one. Everyone will introduce themselves in about a 30-second, 60-second window. We'll do a little bit of background about why, what's going on, and a little bit about my personal background as well. A couple of the approaches to VR fundraising, and then I will hand over the mic mainly to Michael and anyone else. Nanea Reeves said she was joining, and she will be the voice. So Michael will be the voice of innovation and contemporary fundraising, and Nanea will be the voice of traditional because she just closed a pretty big round. And then we'll have a little outro, and anyone you can jump and add additions here if you so desire. I'm not really good with these larger Zoom calls in terms of raising hands and asking questions and whatnot, so feel free to just jump in. So let's roll, starting with the vision. The vision I have for us here, it's always been the same thing since I started these, or got Stephen's permission to set up these kind of ISV masterminds, is for us to come together, especially in this situation here, to grow the pie and achieve economies of scale when we're deploying our resources into activities to achieve our goals, and to make the most, and all of that to make the most of this unique moment in time. Like I've been in the industry since November 2019. That's when I got my first headset. I'm pretty new, but now I think we'll all agree that there is a tipping point happening, and so we need to make the most of it. So that's an outline of the vision. Now I'm going to sort of pass the mic over, and we're going to go, I'm not sure how we're going to go, like we'll go in order of who's appearing on my screen. Everyone's going to introduce themselves, 30 to 60 seconds. Okay, Andreas, Andreas, good job on editing the mind map there. Let me correct that. That was future entities. And so starting with you, Andreas, what is your current entity? What is the financing status? What are your future entities and the financing status or plans?
All right, so I'm mainly into virtual storytelling, producing VR experiences for brands. So financing is coming via direct customers. So I'm not too much of a pro in getting my own software financed, but I'm interested in it. So maybe I can learn something from you.
Perfect. Michael, you're next. Quick background, quick intro.
1 second. So
the other Michael, sorry, Michael B.
Oh, sorry.
Hey guys, pleasure to meet everyone. I look forward to today's discussion. My name is Michael Bertov. I'm a serial entrepreneur. Like Alex said, I'll be talking a lot about alternative fundraising. I am an expert in equity crowdfunding and rewards crowdfunding. I don't know if these are terms that are familiar, but we'll definitely dive in. And also I've raised a fair amount through venture capital as well. But I'll be talking about how to fund really innovative and disruptive ideas in the modern world, which is very different than even 5-10 years ago.
And to add to that, he is the author of the Bible that I've come across in my deep dive, the Evergreen Startup. Everyone has to buy it. And he's also been consulting for Verzoom, which is one of the success stories in equity crowdfunding in VR on WeFunder and other platforms. So he's been advising them. He's helping us out with our current raise and everything. So he's going to be an authority, let's say. Jordan, over to you.
Hi, my company is called Bertro Technology. We create virtual humans that work in VR or in WebXR that you can have real conversations with. At the moment, we're bootstrapping, doing work for clients and selling our own products. Interested in raising funds though, because like you say, Alex, the time everyone's got the metaverse on their radar right now. So I want to raise funds to take my virtual humans to the metaverse.
Yeah. And when Jordan showed up to our VR masterminds, she blew me away in the potential that I'd never really thought of having an AI avatar in VR that can help people, customer service, therapy, whatever the limitation is, your imagination, really. Awesome. Thanks for joining. Over to you, Craig Kaplan.
Hi, everybody. I'm Craig Kaplan, Chief Customer Officer at Virbela, part of the EXP family of companies, including Frame VR. I wanted to jump on because I'm an angel investor and LP. We're not fundraising right now. We're owned by EXP, but wanted to share or learn where I can help and connect people into the network and learn from you all. So nice to meet everybody.
Thank you. Thank you. Great to have you on board. Virbela, I believe, is one of the entities which is aiming to disrupt real-world events. And that, yeah, I fully support that plan. Thank you.
And we're focused on immersive experiences on the Virbela side instead of VR specifically. So a little bit of a different angle there, providing employee experiences across the enterprise for Virbela, whereas Frame is really deep into VR functionality and trying to revolutionize meeting engagement. So really competing directly with Workroom and Engage VR on that side.
Thank you. Over to you, Hesvatio.
Yeah, thanks. Hey, I'm Hesvatio. I am a VR creator from Brooklyn. I'm running the studio Made in Brooklyn Games. We released Don't Look Away, and we're currently releasing Museum Multiverse for all platforms. Most of this has been kind of like done without funding, so just kind of trying to learn how to like step up my creations with fundraising and getting more funding on the projects I work on.
Beautiful. Beautiful. Thank you. Mathieu?
Yes. Okay. So I'm the founder of Proteus VR, and we are doing virtual labs, so chemistry labs and physics labs for school. And we received government funding, and we received also an EPIC mega grant. And we have also, we are beginning to have some clients, so some private, some funding from clients, but we are at the stage that we should, we want to add more levels, more experiences, more things. So we need funding for that.
Outstanding. And next in line is Mr. Stephen McDonald. Needs no introduction.
Hi, everybody. Just listening in.
Thanks for joining. Stephen is head of responsible for Oculus for Business and the ISV program itself. So thanks to him.
Not Oculus for Business, Alex. No. As of December 31st, no.
2000
We're all
late.
on the road to Quest for Business now.
Oh, man. Thank you. Yes, thank you for correcting. And I think you're going to hear some interesting stuff here. I'm not sure if you saw the agenda, but it's going to be dope. Okay, Dr. Rolf.
Yeah, hi guys. Thanks for the invitation. Thanks, Alex, for setting this up. I think this makes perfect sense. So my name is Rolf. I'm representing VR Direct, which I founded a couple of years ago. We've raised quite some capital over the last years, and providing an enterprise VR software solution and a white label solution for telcos. Super excited also to share my experiences and to get your thoughts in this group.
Okay.
Thanks.
I'll add you to the hand over the mic section here under traditional, right?
Yeah. I'll jump in now.
Okay, Robin, over to you, ma'am.
Hey, I'm not actually sure this is working. Yes?
It is working.
Okay, great. Sorry, I was actually recording a pitch video for money. Big shock. So everything was all discombobulated. So you guys probably know me for 3 Pound Games. That's what's in our Oculus for Business. We've been doing a variety of, gaming plus, of course, leveraging our gaming capabilities and IP into the VR training space and digital twinning. Been very successful in that area because we make high quality digital twins and really fun games for clients, which is what everybody wants today, not just the PowerPoint and VR. We actually make it fun. So what we've learned from that is that our IP actually has some serious value in this, and we're leveraging that now to step up into a higher level of 3 Pound XR, where 3 Pound Games is just a division of 3 Pound XR, and so will 3 Pound Medical, 3 Pound Logistics, all kinds of different stacks that we're going to go into of different areas. So what we're doing now is fundraising to kind of raise the roof on what we're doing and hire a ton of people and really light this thing on fire.
Yep. Okay, thank you. And Robin and us and ourselves have already connected towards that end of collaborating. So we hope that you guys will be joining us in figuring this out as well.
Yeah, absolutely. Yeah, because part of our model is to move into the accelerator space where we recognize that, Alex, you're obviously not one of these, but there's a lot of creators out there that really want to get into XR, and a lot of companies that want to they just have no idea where to start or what to do, all of that. And we have all these capabilities. So we can bring people into, through our process, help them develop their application and send them on their way. So, more of an accelerator model, less of a studio model, and that's where we're moving toward.
Very nice. Dr. Rolf, how much time do you have before you have to jump off? I couldn't find the chat. I saw you sent a message.
Yeah, I have to say I'm sorry. I'm at CES right now, so I have a few sessions and a few meetings, and I'll try my best to provide my feedback in this session.
How long do you have? Because if you have like 5 minutes, you can have your little talk or kind of sharing.
Just go ahead. I'll have to eventually in between drop off for a few minutes.
Okay, let us know. Okay, Michael G, over to you, partner.
Hi there. Hi, I'm Michael. I'm Alex's. Can you see me? I can't see my camera.
Yes.
Yeah, okay. Yes. I'm Alex's co-founder. We are together working on a fitness app VR workout. Well, the name says it all. So it's not the best CEO, but it's really catchy from the point of that you know what it is. We are actually trying to be the fitness first app on Oculus, on Meta Quest, and we're actually trying to push what's possible in VR by doing the hard stuff the others aren't doing at the moment. So like we started off with hand tracking, and we're also doing feet tracking and heart rate tracking, and we track basically everything. What we actually want to achieve is to have a fitness app that the everybody person can use, which isn't the standard fitboxing game that everybody is using at the moment, which actually gets you into a love for exercise, where you do full body stuff, we have lots of people who actually never did a burpee before and gave us the info that they did their first burpee in VR because
first and last.
Because when the game tells you get on the floor and then it tells you get up and hit that ball up there, then you automatically do a burpee without actually realizing it, even though the game tells you that you're doing it. And yeah, that's what we're trying to do. We're trying to get people fit, trying to get people healthy with what the technology that's currently available.
Thank you. Alessandro?
Yes, sorry for my name is Antonio Squeo. This is the name of my son, Alessandro, because I connect with it was a problem. I had a problem with the connection. Antonio Squeo and Chief Innovation Officer of Evolus. We are finished our first fundraising last year with the Cassa Depositi e Prestiti Fondo Innovazione Italiano, and we are here to understand in which way we can have the second fundraising in US market.
Okay, very nice. We'll pick your brain on that, hopefully. Jim from Paracosma.
Yeah, good afternoon, everybody. I am CRO of Paracosma, and I see Ken, who is our CEO, is on the phone or on the call with us today as well. So you're going to hear a little bit from both of us, but we are a service provider, AR, VR, 3D. Some of you know us. 2016, we were founded, and we're pretty much that guy who was providing bandwidth and expertise for development to folks like yourself that are developers, not so much the end user, but the folks that are developing 3D modeling, AR and VR services, and quite a bit more. So, and I'm sure Ken will expand on that a little bit. And I'm happy to be here today and sharing and learning.
Thank you. And Ken, you're actually next. I will add they have 80 plus, I don't know what the current number is, developers VR developers in Nepal, which is pretty awesome.
Yeah, we're over 100 now. So
scaling up.
Very, very good year last year. Coming off the pandemic, it was a little slow. We froze a lot of our hiring for a couple of years, but we're back to hiring and expanding. We're expanding our Unity and our development teams as well as our art teams. As Jim said, we're really focused on long-term relationships with our clients, whether it's for modeling and ongoing modeling every week, every month for clients, or actually renting developers, so to speak, where we're providing entire teams to companies now so they can scale their capacity, scale their team as they go forward. And so, that's going quite well for us. We're actually talking to a lot of the companies that are getting venture funding these days in order to help them meet their targets of expanding their team and growing their team. So
are you fundraising for yourselves at the moment or planning to?
Potentially. I think we're at an inflection point now where if we can invest more in equipment and hiring and training, then we can grow faster. So there's an argument for capital raise. Right now we're cash flow positive at the moment, so we can grow organically, but I think we could accelerate the trends we're seeing in the marketplace if we brought in some funding. So, if we found the right partner, then that's certainly an option this year.
Lovely. Danoni was next. Majid, over to you.
Hello, everyone. It's a great pleasure to meet all of you. My name is Majid Farag. I'm the creative and managing director of 5DVR. It might be relevant, but I actually started my first company in 1994. We're doing multimedia at the time, and we actually did some VR then, like 360 photos and stuff. So technically speaking, we've been doing VR for more than 20 years. What might be relevant is that in 2011, we made a joint venture with a Danish gaming company, and that's when we started doing AR. And in 2013, we merged with the Danish company and two other Egyptian companies to form like a one-stop shop digital marketing agency. Then we founded 5DVR as a parent, the daughter company of 5D Agency in 2016. So yeah, it's a great pleasure to connect with all of you. Again, it would be great to learn from all of you how we can move forward.
Thank you. And who's next? Giuseppe? Remember, we're asking generally about current entity and future entities with a focus on fundraising or financing.
Hi, I'm Giuseppe. I represent Link2VR. We're a virtual and augmented reality business solutions agency. So a big goal of ours is to kind of just help educate the enterprise community on VR. We've done things from events to actual development of apps. And so far we've been client funded. We had a small group of investors at the very beginning, but kind of since then it's been primarily customer funded. However, we are interested in learning about different types of investment for scaling our company moving forward. So that's kind of where we're at right now.
Awesome, thank you. Matt, you dropped when it was your turn, so now I just saw you rejoined.
Hey guys, how's it going? Sorry, can you hear me? Because my computer crashed right at that point.
Over to you, man.
Yeah. Okay, cool. Wow, there's a lot of intros, but anyway, I'll make mine short. I am an Australian who runs a production company for the last decade out of Dubai. So film, animation, AR and VR for brands. And I also are in the health tech space. I run an online psychology and psychotherapist company, online therapy company. We've done sort of like a pre-seed raise. And I'm also involved with Alex in VR Workouts, a creative director.
Lovely. I think we're up almost at the end. We're at Kretu.
Hey guys,
sorry, George.
It's George, but
yeah, sorry.
Romanian standards typically reverse the names. It's fine. Yeah, I'm founder of CG Artifacts. We do B2B white label enterprise VR apps and AR apps. And currently we're mostly focused on training apps. And we're very interested in pivoting towards a B2C business model where we put forward a consumer VR app for the Quest hardware. And we're interested in raising funds for that because it's too hard to do it on the side.
Lovely, lovely. Okay, 3 more people, guys. Thank you for your patience. Before we get into the meat and potatoes, Anthony.
Yeah, hi. I'll be brief. Anthony Hamilton, CEO of Inter1. We have around 100 employees globally. We're traditionally an IT training company and have been doing VR since the Rift. Focused on IT training. We also have a game and a bunch of different experiences. So, you know, what interests me is if there's potential for acquisition of a small shop. We've done 3 acquisitions over the years.
Nice.
And so I'm interested to hear what everyone's got to say. And, you know, it'd be nice to somehow, Alex, if we could post call. I know, you know, most these people are on the directory, but is there a way to kind of summarize who's here and how to get in touch with people?
I'll send a recap. I will send a detailed recap, and this is all being recorded so we can share it amongst ourselves and reach out to people and everything. So yeah, this is what it's all about as well. I think the main platform should be the ISV workplace, and yeah, let's definitely do that. Last person, Sushmita.
Hi, can you hear me? I'm sorry, there were some issues with the audio. Hi, my name is Sushmita. I'm from New Jersey. So we started back into 2019. You know, we were in the Oculus Start program, and we created an Heartstroke program, which we actually piloted to a lot of New Jersey schools. We were in an accelerator program with HGIT through the NSF ICOPS program. So that's where we started. Then we moved to the Oculus ISV. We are actually building a kind of a no-code platform, a micro-credentialing for CME, CE, and other credits for VR, nursing, and medical education.
Very nice. And your fundraising?
Yes, we are actually the federal funding since, you know, we are more active on that. We've since we were in NSF ICOPS, we were trying to get into the NSF. Unfortunately, we didn't get that. We are now trying for an NIH one, you know, which we've just started working on. Yes, I'm also looking at private funding. I've talked to a few people, but they are really looking for, you know, a lot of, you know, we've definitely spread out to many companies and doing proof of concepts in healthcare, but they're really looking at like huge revenue streams and stuff like that. So I would be very interested to know, you know, how do we scale VR? And also, Alex, if I can, since Stephen is here, there are 3 very important things I would like to see on the ISV front. One is security, one is privacy, and accessibility. How do we address this? You know, I'm a small indie shop. I don't have a big company, and we are totally, since, you know, we are doing federal funds, we are totally US based. So our team is US based. So it's a bunch of, you know, full-time people as well as some contractors.
Okay. Like we'll see if we have a chance to get back on those.
Yes,
now,
I'll be really, you know, very, very helpful if we can have some kind of an, you know, enterprise blueprint created, you know, for the ISVs, especially to follow, like, how do we go about it?
Okay. Dr. Akiki, you're the last one, mate.
Yes, hi everyone. It was great to hear all those introductions. I'm going to be very brief. I'm the founder of bookzdoctor.com. and it's a platform where we connect doctors to patients internationally for the second opinion. And we have a couple of programs that we sell. One is a wellness program and one is a behavioral program. And Alex, thank you for inviting me, and to hear everyone here on this platform. It's amazing introductions. Thank you.
Awesome. And he will be fundraising as well. So let's dive in. Okay. A little bit of background. First of all, there have been 2 paradigm shifts that have occurred in the last, let's say, couple of years, depending on how you look at it. First of all, the Jobs Act, which unlocked early stage finance and shifted the power away from the angel and VC class. And Michael, feel free to jump in if I'm botching this, okay? This thing here allowed unaccredited investors who are people who are just normal people. An accredited investor has 1 million liquidity, not including primary residents. This allowed everyone to invest into early stage companies and unlock that kind of pool of capital for funding innovation and the creation of jobs. Okay, that's actually an acronym. The other one, which has happened over the last couple of years, is the tokenization revolution. And so we will touch briefly on this one here, but this one here is going to be one of the main focuses of this conversation, I hope. And that's what this is all about. So like that, and the reason why I came across this is I was wanting to do things by the book in the current raises that I'm working on, which is mainly for VR Workout and also for Noda, our mind mapping software. And when I started reading all these books, I realized that the books were written by the venture capital class and the angel investor class, because these people look at 100 business plans a week or 100 decks a week. They make their decisions, whereas the founders have 1 or 2 companies normally that they start and hopefully exit from or whatever. So the bias of information and knowledge is heavily focused from the VCs, and that there is not always aligned with people like us who are the creator class, the founder class. You know what I mean? So yeah, I've described the background of my entities, Noda, VR Workout. I'm building this as a personal expertise and superpower. I'm really excited about it, and I hope that I'll show you how I mean that. Okay, now let's get over to the current approaches in fundraising. There is the traditional approach, which is basically bootstrapping or angel/VC funding. And there are what we would call the contemporary modern approaches, which is equity crowdfund, of which there are 2 VR case studies, Immersed and Verzoom, as well as XLab, and a couple of other ones, XR Health. The main successful ones, these are the main successful ones here, and we can go into details on those. The other modern approach is tokenizing the business and using, like the blockchain or NFTs or whatever to allow your customers to buy into the venture. I'm not so familiar with that here. The equity crowdfunding is making a lot more sense. Does anyone have any thoughts or questions about that so far? Okay, if not, I will hand over to Michael. Sorry, Dr. Rolf, you still here? He jumped off, yeah? Michael, would you give it your kind of take on what I just spoke about and any thoughts that would be useful to the crew here?
Sure, yeah. Let me start, excuse me. Let me start with a little history. This might not seem extremely relevant right now, but maybe in 5-10 minutes of me talking, it'll become a little more relevant. Fundraising for companies goes back a long way. Obviously, from the beginning of time, people have had ideas and they needed to fund them somehow. Speaking about the largest market for early stage company fundraising, which is the United States. The United States in the 1920s had an issue. There was a lot of scammers. There was a lot of people faking things, selling stocks in companies they didn't own, lying about financials. A lot of people stole a lot of money. So what the United States Congress did in the 1920s, and they instituted a series of laws. And as Alex alluded to, one of those laws is the definition of creating what is called an accredited investor. So the United States Congress created a class of people that was legally allowed to invest in privately held companies. So privately held companies are companies that are not on a public stock market. In the 1920s, the best tool they had for deciding who was sophisticated enough to invest is their amount of income or the amount of assets. So over the years, this has evolved from the 1920s, but today this rule still applies. And the only people in the United States, outside of equity crowdfunding that we'll go into, that are allowed to invest in early stage companies, into privately held companies, are what are called accredited investors. And these are people that have over $250,000 of income a year and over $1 million of net worth, excluding the value of their primary property. So effectively millionaires. I'll just refer to them as millionaires from now on. So since the 1920s and up until now, only millionaires are legally allowed to invest into privately held companies, startups, as we all are here, in the United States. Now, this seems like a reasonable thing, but this kind of started falling apart in 2008. It started falling apart before that, but in 2008, it was particularly problematic. As if you guys remember, in 2008, we had an economic crisis. We had a collapse of the economy. I was actually working on Wall Street, trading credit derivatives at the time, so I caused it. It wasn't all me. It was a team effort, but I helped. So my team at UBS, which is a Swiss bank, we helped crash the economy. So what happened when the global economy crashed is a lot of really wealthy people, the people who would be the millionaires, who would be investing into private companies, they stopped investing. They lost all their money, or they lost all their liquidity, more specifically. So they didn't have any money to invest. So what happened is companies started not being able to raise money. So the Jobs Act came around under the Obama administration, and it was introduced as a reform to the old way of investing. Now, one of the issues, the social issues with only having millionaires be able to invest is that, as you can imagine, most millionaires in the United States are in their mid-60s and men and white. So if you have older white men being in charge of funding innovation in the United States, it really creates a lot of issues because they're not necessarily the demographic you would think would be responsible for being able to see the future trends, and really being able to identify, the innovators and disruptors. In fact, that's the demographic you would associate with defending the status quo, the old way of doing things. So that's been a conceptual issue for a long time. And by the way, even now, if you look at traditional venture capital and angel investing, about 98% of the companies that are invested into are run by white males. So less than 2% of founders are female or minority founders, Black, Hispanic, will get venture capital. This is today, this is 2021. So 98% of venture capital goes to white male founders. Again, not 1950, not 1940, 2021. So anyway, so this is an issue. Silicon Valley has had this problem for a long time. Not only Silicon Valley, but New York, Boston, all the big eco centers. So that being said, Congress doesn't like this. The United States Congress didn't like this in 2008. They still don't like it now. And they introduced a series of reforms. One of the reforms that was introduced that was specifically tailored to funding early stage companies under the Jobs Act is something we call equity crowdfunding. Now, at the time, things like Kickstarter were extremely popular. And Kickstarter is a type of crowdfunding. So what the United States Congress did is they decided to make a law and name it something popular. They named it something like crowdfunding. Although it is a slightly misleading term, because basically what it's allowing to do is it's allowing regular people, non-millionaires, to invest in startups. So that's effectively that space. Right now in the United States, there's about 170 accredited portals. So FINRA is a government agency, and the SEC that is in charge of accrediting these portals. All fundraising that's done through what was called Reg CF equity crowdfunding, Immerse, Verzoom, all these guys raised through Reg CF. That's the most accessible form of equity crowdfunding, has to happen on a portal. That portal has some audit requirements that they have to go along with the government. There's about 170 portals. There's no particularly good ones in the VR space, although the portal is, I mean, let me step back 1 second. So this legislation was introduced in 2008. The first portal only launched in 2016 because it takes a really long time. So this whole paradigm of fundraising, by the way, a paradigm that has raised billions of dollars already, has only been around for about 5 years. So it's brand new. Most people have not.
It's brand new. And it's the limit was 1.07 million, and last year, 2021 March, they increased the limit to 5 million, which we all know, especially the service providers here, what we can do with 5 million worth of budget.
Yeah, and 5 million a year to add to that, not 5 million in total. So you can raise up to 5 million a year from regular people, non-accredited investors. So potentially your customers.
An easy sell. An easier sell, let's say.
So the other industries have had very specialized portals. There hasn't been a portal in the VR space. However, the 2 portals that I would recommend that are probably the best fit for VR that have traditionally been the best fit is, I would say, WeFunder is number 1. So far, I have had the most success with that type of company, and then Start Engine is number 2. That being said, both of these portals and a lot of others have hundreds and hundreds of thousands of active, regular people investing. So the pool of potential investors that is already built into the platform is going to be much larger than any VC or angel group that you could possibly imagine. We're talking about hundreds of thousands of investors. Yeah. Now, the challenge, as always, is marketing. And the approach that you would take to raise from the crowd is a radically different approach that you would take than raising from angels or venture capitalists. The big advantages are that it's much more similar to how you would market your product. There's much more overlap. For example, you can use Facebook ads, you can use other things, modern tools like that. You cannot use Facebook ads for venture capital or angel raises because of laws of various sorts. So there's a lot more overlap, and so a lot of companies have just more skill set in marketing to regular folks, including your customers. Your customers are potentially really great investors, and most companies that I've seen, I've advised dozens and dozens of multi-million-dollar equity crowdfunding raises. A lot of that initial investment comes from customers and friends and family, but people who might not necessarily be eligible by law to invest in your company in any other way other than equity crowdfunding.
One thing I got from Michael's book, which really kind of blew my mind, was that any business is in the business of selling 2 things. One is the products or services that they sell, and the other thing is the securities, the shares of the business to fund the development of the products and services. And actually, it also goes the other way. The products and services help you sell the securities of the business. So what this is doing is really unlocking the liquidity and the kind of benefits that public companies have always had into private companies, early stage companies, our grade of startup and venture and everything. Because you open up the raise, you get cash in, you make awesome things happen. You close the raise, you make awesome things happen. A few months later, you reopen it at a higher valuation because you've made great progress and gotten traction and that kind of thing. And so it's kind of like almost having a public company. It's like some of the crowd funds are called mini IPOs. Just thought I'd throw that in there.
Yep. Yeah, and but it's not. I mean, absolutely. I'm a huge fan of equity crowdfunding. Like I said, I think that should be the default for fundraising. That being said, it's not a given. You're not necessarily going to raise a whole bunch of money. Some people are genuinely just better at selling securities to private placement, to regular rich people. Some people are better at this. So if you're better at selling to angels or venture capitalists, and that's more your model, angel and venture capitalist investors actually have a good number of advantages over going to the crowd. They will be more likely to give you more money if your company is struggling. Because
can I give I give a bit of context? By the way, guys, the way that I've been thinking about this is not the kind of basic, hey, let's come up with an idea and make a crowdfunding page. This effort, earmark $100,000 to $200,000 for the crowd fund. Okay, please keep that in mind. It is a high budget activity. You're investing in presenting your company in the best light That means like high production grade video, intro video, team video, renders, etc. with a professional production company, $100,000 into marketing spend, PR, performance marketing, that kind of thing. Keep that in mind, everyone. I have an idea. I would like to pass the mic over to Craig because he seems to be, aside from maybe Ken, one of the most sophisticated VC people in the room. Does anyone have any questions before I ask Craig for some inputs or thoughts? Okay. Good. So,
well, hey,
Craig.
Thanks, Alex. I just got to say, I'm an operator. So I've been in startups for 20 years, not as a co-founder. I'm not brave enough to do what you all are doing and actually start the companies, but I come in and build the sales teams and the customer success and help scale them. And I started angel investing and not doing it very well, in my own opinion, and started learning and reading about it and became more involved as a venture partner, traditional VC, but in a unique venture partner network. NextGen really had the idea of crowdsourcing through a traditional approach and started looking at bringing in executives who had an interest in investing but didn't want to do it as a full-time gig. And so it's built a network of over 1,200 venture partners, including myself, who are basically free expertise for them during the investment committees. But it has created a really great network just for kind of going out there and getting advisors or support for startups.
1,200 is definitely a crowd in itself.
Yeah, that's a pretty good crowd, and they came up with this concept about 7 years ago, before a lot of the openings to really do kind of true crowdsourced crowdfunding. So now I think honestly they're pretty challenged in the traditional VC market, but have, because of all these other options out there for investing. But if you're going to go the VC route and don't have an incredibly strong relationship or network within a particular traditional VC, these guys have a terrific, broad-based network. And then the other piece. Yep, go ahead.
What did you think about this whole disruption or change in the industry from the more traditional point of view? Do you have any views on that?
I personally love it. It's because, equity amongst getting money is good for founders and good for letting the innovators really come out and not really just about your connections. So it is. I think it's fantastic. My own personal view on these sorts of things is that you want investors, right, who ideally have a really strong connection to your mission and help to support that mission, both from advice and operating perspective and their relationships that help to lead to other types of outcomes.
Ambassadorships.
Right?
Ambassadorships. They become an ambassador.
Exactly. And really in Silicon Valley, that's a very, very elite group. It's a big group, but a very elite group. And so what I ended up doing personally was connecting with Jason Calacanis, as I mentioned in chat, because he was a client of mine, but he has a very methodical approach to investing in early stage startups.
Yeah, by the way, everyone, he wrote the book Angel. That's another one of the Bibles, but of the traditional camp, more I'd say, the angel camp. Yeah. Awesome.
And he's a journalist by trade. So he's not a financial guy or gal. He's a journalist, and he really goes out and asks the tough questions and really kind of puts you into a mindset of like really thinking about methodically, your business model, your product market fit, and those sorts of things. So I really respect him from that perspective.
And he also put 100K. He put 100K into Uber.
Yep.
On their first round when it was worth $3 million.
He's done that. He's had 4 investments as an early stage investment into unicorns. I'm waiting to see whether that does for my investment. Hold on. I think Antonio's not on mute. I really take a pretty objective look into these sorts of things. I've made mistakes in my own startup investing. I've pretty much angel invested into friends, which has been good in some cases and bad in some cases, but that's what you do with friends. lens if you can. But I like to have just a broad experience of these things. I think crowdfunding is fantastic. My personal view is, though, you're looking for investors that really have a way to become operating partners. And I caution on this too, because I used to be part of Verizon. One of the startups I grew with was acquired by Verizon, and we worked closely with Verizon Ventures. And be honest, the last thing I would tell you to do is get investment from one of these really big company venture portfolios, because they don't really open doors. But if you need to get money from them, obviously you get money from where you need to get money from. But those big companies who want to open doors don't really have the power or the inclination to do it. And so really looking at someone with a very strong network within your industry, because what it looks a downstream type of benefits, in my opinion, is that you get potential for more investment right from their network. And smart money, right, goes out and invest in other smart money. And so people are looking at folks like what Jason Kalkanis does and other, leading investors in the space on a broad-based period. But of course, then there's like really deep VR investors in terms of the VCs out there, or other types of angel investors in that space. And I think the question around getting a VR-focused investor is, does it enable your business strategy? Does it enable your growth? Does it enable your network? In my view of like operating at Virbela, if I looked back at whether we would go out for funding right now, I would look at not necessarily VR investment to enable our strategy, because we're looking at an enterprise employee experience strategy. We're not focused on sort of VR functionality for one side of our business. We're focused on HR tech. So I would actually look for investors around HR technology, employee experiences, and tying into enterprise services. Yeah. And there's organizations like Plug and Play Tech that do introductions like into the enterprise space and set up those sorts of demos for you. And that's, if that's your customers, you might look at those types of investors versus looking at folks who are just deep, VR experts. Just ways of looking at who your market is, who your potential channel partners or relationships on the business side, and think about who are the investors playing in those spaces. So my 2 cents. Nice. Thanks for the platform, Alex, and
thank you,
pulling this all together.
I'm going to ask Ken as another authority. Ken how long have you been in VC for, Ken?
Since 2020. So 21 years, 22 years.
Since 2001, you mean?
Since 2000.
Since 2000. Yeah. So what are your thoughts on what has been shared so far?
Yeah, the traditional VC markets, difficult, and it's partly because you're looking to invest in those Googles and the Facebooks that are going to have massive multiples and scalability. And a lot of the venture, the VR area came about from services and areas that are slower scaling or slower growing. And we've really seen tremendous waves within the VR funding and AR funding areas, where we started, with the VR wave in 2016 and the hype around the launch of the headsets and so forth. And this was the future. That didn't turn out as many people had forecasted at the rate that people forecasted. And you went through, everyone said, oh, well, it's AR, not VR. And AR is going to be bigger than VR. And we didn't really see much except for Pokemon Go. Then we had, location-based VR was going to be the thing. Then enterprise training in VR was going to be the thing. Then the pandemic hit and virtual events were going to be the thing. Then we had the Quest 2 wave with Beat Saber, and here's the victory. And people like to look at the examples, right? The case studies of, hey, this company did well with this. And then we hit the NFT wave and now the metaverse wave. And so if you're in the right point at the right time surfing these waves, if you're, a jaunt or something like this, where you raise tons of money, take the money when it's available, because it might not be available the next day, but you have to spend the money like it will not be available, right? And be cautious. I kept a spreadsheet of the failed VR companies that raised 10, 40, 200 million dollars and went out of business because they spent it as if the market was going to be there in 6 months, and it wasn't. And so I think really understanding your market, where you're going, I think that's why crowdfunding has an advantage sometimes, because they're looking at, they're marketing to their customers, they're marketing to people who have the passion or belief in what they're doing. And, that goes a long way. But in terms of traditional investors, they really want, they're investing in the future, but also they want to know the examples of where companies are succeeding in this area and where their exit will be. Because the real ingredient is every VC that's investing is investing from a fund. That fund has a limited lifespan, and those investors have a need to get their capital back. And so VC investors, traditional investors, want to invest where they know the time horizon for an exit. They know that the exit multiple will be large enough to make up for their failures. And then you check the right boxes. But it can be difficult for startups unless they can, prove their value. And, we've seen over those 20 years a huge shift as well, where you might have had a business plan and raised millions of dollars for servers, and then it all shifted to the cloud, and you didn't have to do that. You just use AWS, and then people want you to prototype things. It's relatively easy to launch an app on Quest and get it out there in the marketplace, so the investors have a chance to see if it failed or not, or if it has traction or not. And so I think, it's an interesting market.
Have you been keeping an eye on the equity crowdfunding movement at all, or is this kind of new for you?
Yeah, no, I have. And we see, you see some successes like Immerse and others. You also see some failures, right? We've seen a few unnotable companies that launched crowdfunding and they raised $5,000, and then, that was it, right? And a couple of them, they're not massive successes. And so I think a lot of it comes down to that marketing. And, when Immerse raised their crowdfunding round, they had 5,000 in revenues, right? For the first round, and 6 months later or something, they had 40,000 in revenues. And so on a revenue multiple, that makes a lot of companies look very valuable. But they weren't raising the money and closing the money based on their fundamentals. They were based on the excitement they had around their raise.
Yeah.
And so a lot of it comes down to marketing.
And yeah, that there is all of our opportunity right now is to create that dream, communicate that dream, and put decent cash into promoting that dream via the channels I mentioned: PR, performance marketing. Michael, back to you. I know you have a lot of things to say. I mean, one thing that struck me from your book: only 5% of VC firms return capital to their investors, for example.
I think it's 7%. So it's much better than you're saying. Much better.
And this here is the real
50%
disruption.
better.
Yeah. Sorry. Yeah, my numbers are off. But like, seriously, everyone, like what we can do with the crowd, the wisdom of crowds, when you're acquiring, when you're putting 100K, 200K into your fundraise, you're buying not only investors, you're also buying ambassadors, users, people who are going to feel an affinity with your brand, reach, what Craig was talking about, having that pool of 1,200 people. When you send an email out, hey, we're hiring for head of UX, people will start, delivering on anything you ask for. That they have skin in the game, and they'll care more. Maybe I have a theory. They will care more than the sort of like traditional VC firms, your managing partner who's responsible for your deal.
Well, so let me add a little color to that. Yeah, I'm not against VC. VC has its place. It has its place for over 50 years in the United States. It's been the cornerstone of funding companies. They have a lot more capital, dollar for dollar, to deploy than the crowd does currently, just because I would argue because the crowd is young, that method of fundraising is young, but also the idea of that smart money, of that guidance, right? So VC, the good ones, can add value. They'll have companies, they'll have people in their networks that can work for you.
One thing, Michael,
yeah,
I heard this year equity crowdfunding surpassed venture capital funding, angel funding this year or last year.
Globally, but that's led a lot by China as well, not in the US.
Okay.
And it's very different space there. But yes, yeah, oh no, it's blowing up. I think every year it's like 5-10 times higher than the year before. I mean, within 10 years, it will be the default way to fundraise, and I completely endorse that. But just to go back a little bit to what I was saying about VC, VC aren't evil, right? There's a lot of value to VC. That being said, I have taken money from venture capitalists. I know a lot of people who have taken money from venture capitalists. There is good VC out there that will provide a lot of value, a lot of guidance, a lot of introductions, a lot of support, follow-on capital. They'll lead additional rounds. All of these things don't really happen with a crowd. However, it's really a double-edged sword, because that VC, in providing that support, will also take control of your company. And at some point, your interests and the interests of your investors might very well diverge. At that point, that creates conflicts. I know founders that have been forced out of their companies. I know companies that have been forced into bankruptcy for the VCs to take their write-offs. I mean, it can get pretty ugly as well. And that's a paradigm that doesn't exist with the crowd. The crowd does not get control. There's no board seats issued to the crowd. There's no protective provisions or, special covenants for them to vote on, issuing more options or, special anti-dilution provisions or anything like that. So if you're not sophisticated in selling securities to the crowd is just a much more straightforward process. If you are sophisticated, every VC, that's what they do for a living, right? They buy securities. They've been doing it for 20 years, 50 years. It's their job. You will never get a good deal with a VC, ever. It's not a thing that can happen because they're the experts. And you might have some lawyers and things like that, but you're not an expert, right? I mean, generally as a founder, you're an expert in your products, in selling your products, not in the selling of your securities. So all these things are kind of like red herrings, like arguing about your valuation with a VC, all that kind of stuff. It doesn't really matter that much what your valuation is. It's really all that other stuff that matters. Now, with the crowd, it's much more straightforward. Now, that being said, the crowd is on track to surpass VC, but VC do have a lot more capital to deploy. They can deploy it much faster than the crowd does. A VC might have $100 million lying around. When they see an opportunity, they can deploy that in a heartbeat. It's going to take a long time to raise that from the crowd. So right now there is an inflection point in the metaverse and all that kind of stuff. And VC might be a better fit as far as raising capital. But a lot of it is just, it's a tool in a toolbox, and there's positives and negatives to both ways to fundraise. So like I said, I think that the traditional model has a lot of issues. It has a lot of challenges. But it's still the predominant model, and it's still the model with the most money. And if you partner with a good VC fund, it is very advantageous. I have heard wonderful stories about VC helping and supporting companies and growing their.
If you're lucky, if you find them.
The problem is it's really hard to know. And a lot of these things are outside of your control, because honestly, if the winds change, if their portfolio strategies changes, if the market changes and the VC is just not interested in your type of company anymore, they're not your friend anymore. This stuff creates conflicts. There's just something to be aware of.
Nice one. Thank you. I want to pass the mic over to Stephen for a jiffy. Stephen McDonald. Yes, you.
God.
As someone who has tentacles into many different organizations and everything, what has your view been? Is there anything you've been seeing, anything you'd like to share with everyone?
No, not really. I mean, I take probably a different approach, and I'm looking at the overall wellness, I guess, of the ISVs. But I'm definitely seeing a trend of more funding. I couldn't kind of put it into a particular bucket. I'm definitely seeing a lot of growth, a lot of investment in sales and marketing expansion. But no, not really. I mean, of course, very excited to see the growth. We know that this is going to be a critically important year. From our perspective, we agree that training is a really hot area. We also think kind of 3D workflows is a space that bears a lot of investigation. And of course, you know, the health and fitness area is kind of, it feels like it might be the next thing to sort of unlock a little bit. But no, not really, Alex. This is a wonderful conversation. Thank you so much for hosting it. And Michael, thank you for joining. This is really interesting.
Are you, yeah, so what have your thoughts been? So have you been traditionally looking at things from the VC scene, and then what are we uncovering anything for you with the crowdfunding side? Or have you been following this?
Yeah, I worked fairly close. I mean, I work fairly closely with the guys at the Merce Renji and Co. So, you know, I saw them go through that crowdfunding, and I have only heard good feedback from those guys to this point. Certainly, no, I don't have any kind of input on that front. I know that I've got partners at all sorts of different levels who have sought funding and received funding from partners that I don't think any path should be dismissed. You know, as Michael's was saying, I think, you know, it's going to make sense. There's going to be a lot of different options. You know, I'm seeing developers coming in at all different levels, at all different stages. That's the other exciting thing. You know, at the beginning of last year, we sort of did a bit of a study and looked at, you know, what is the life cycle of an ISV, and typically they're going through inflections and growth spurts and changes and that sort of thing. And I'm definitely seeing that from the community at the moment. But no, very encouraged by everything and very encouraged by this session. Alex, also, thank you for putting this on. I'm a little bit inspired, actually.
Nice one. Awesome. Thank you. Look, let's start towards wrapping up. I will go back to the screen share and back to the agenda. The outro is, guys, first of all, no, does anyone have anything else to share or ask or anything?
Yeah, I have a question for Michael, if I could. In terms of, you know, VCs, traditional VC has a very staged approach, right, with seed investing, Series A, B, C, et cetera. One of the issues that has been a problem sometimes for early stage companies is if they get a outsized valuation in a seed round or something, and it puts off investors later. We don't see the crowdfunding valuations necessarily paralleling what you see in traditional VC. Do you see potential for companies to go back and forth, or to reverse from crowdfunding to traditional venture funding, or do you see it as two parallel but separate paths?
Yeah, that's a great question. So the valuation thing you brought up is actually really topical, because as you know, for a VC round, the valuation is probably one of the least important things, realistically. It's all the anti-dilution, all the other stuff that's going to make the VC own a lot more of the company than the valuation implies, or get more than what they pay for. That's really not an issue with this, with the kind of security that you sell to the crowd. Because there are no special anti-dilution provisions. There's nothing like that. As far as whether those two methods are interchangeable, unfortunately, I would say no. I think you can go to VC and then you can go to the crowd. And then you can raise, there's other types that we didn't talk about of crowdfunding. Reg CF we discussed a little bit, but there's something called a Reg A Plus or Reg D, where you can raise up to $50 million. Unfortunately, right now, the predominant opinion that I see is that venture capitalists do not like companies that have gone through equity crowdfunding. A lot of it, I think, is a very traditional way of looking at it, is saying it's a competitive model. It's, you know, we don't get it. We don't like to see hundreds of people on our cap table. It's a direct threat, that kind of stuff. I think that's going away. In the 5 years or so that I've been working in the space, I think more and more VC are open to it. More and more VC, especially the smaller funds that don't have the deal flow that the large funds have, are more open to, I would call it, co-investing with the crowd. So they would look at who's successful in crowdfunding, and they might fill up that round, or they might have some kind of a side letter agreement. That they don't. The problem is the security that you sell is going to be very different to the VC than the one you would sell to the crowd. But that's kind of a long answer to a short question. But in essence, I don't think they're interchangeable. I don't think you can go back and forth in today's climate. Hopefully in 5-10 years or so, these two methods are gonna going to merge somehow, and we're not going to be enemies anymore, or these two methods aren't going to be enemies anymore. But right now, they're directly competing with each other.
Yeah. Yeah. So, look, I'll wrap it up for everyone. The main thing, one of the main outcomes from this here, I'm on the outro. Okay. Personally, I'm fully available. Michael is also available for helping out. And what we can do, so the pathway for this, if you're interested in the equity crowdfunding side, think 100K to 200K friends and family raise to execute on this. That there should get you 1-2+ million in funding. And an army of like ambassadors and users and people who believe in your vision and everything. And what you need to execute that efficiently is an agency, a crowdfunding. You need a PR agency who hopefully connects into Wired Magazine, The Verge, maybe even higher tier publications, and a crowdfunding agency who has retargeting lists, custom audiences, warm pixels of people who have previously invested in crowdfunding things. Then you put your 100K of click budget through the retargeting audiences, not just cold traffic, throwing your net out there, hoping that you're going to catch someone who wants to do an equity crowdfund investment. You want warm retargeting lists. So these agencies charge 5, 6, 7K plus a percentage of the click budget you put through them, but they have something worth its weight in gold, which is those retargeting audiences. The platforms also have audiences. I'm trying to see whether they will open up those audiences to our budgets. I haven't had a confirmed answer to that. Michael, did I describe that correctly?
Sorry, what specifically? The budget?
Did I describe it correctly about the importance of having a crowdfunding agency who has a warm list of like 100, 200,000 previous interested people in equity crowdfunding?
Yeah, maybe. It really, yes, it obviously helps if you have a whole bunch of people in your network, whether they're traditional investors, angels, VC, or crowd people, or you have access to those networks. I don't think it's critical, to be honest, but it's definitely a plus. Yeah, the more connections you have, the better it is. It's good to use an agency if you trust them, but not everybody will need it. If you already have a network of hundreds of thousands of people, somehow you can do it yourself. It's not as formulaic. It's correct. Yeah, I agree. It definitely helps. Definitely helps.
If you guys have like a product with an existing audience, a warm list of people who know who you are, and then you go to them and you tap them for the raise, that's a very good start. So what I'm looking from my point of view, neither of my products have a very strong existing audience. So we have to buy that.
So the one other thing I would caution as a general word of caution to anybody fundraising is that if you're using some kind of an intermediary to introduce you to potential investors or things like that, and they're getting paid a performance fee, as in they get 5% of your raise or something like that, that is likely extremely illegal in the country that you're in. So you actually get a lot of these types of people around. I have encountered a lot. And I have never, my experience, I have never seen this be successful. I have never seen one of these consultants are actually able to raise money. That being said, they're also doing something that is most likely extremely illegal, and it violates a whole myriad of securities laws. Mm-hmm. So whether you're raising directly or like for private placement, like just from millionaires, or you're raising for the crowd and somebody wants to get paid on performance, as in I'll take, you give me 20 grand now and I'll take 5% of your raise or something like that. From my experience, you're going to give them that 20 grand and nothing ever will happen again. So just a word of caution in general, because there's a lot of this kind of stuff in the startup world, and I've heard some bad stories.
Thank you. Okay, that's it, guys. Does anyone have any parting thoughts or queries or anything? I will share this recording with everyone. I will send a recap, and hopefully we can continue some discussions inside the workplace. Is it okay if I post this in the workplace, the video, Stephen?
Oh, by all means, Alex. This is wonderful. Thank you so much for putting this together.
Thank you.
I love seeing these sorts of things coming from the community. This is this is the dream, honestly. This is what we need to enable more. This format was really interesting. I'm happy for you to promote it, and if there's enough interest, maybe, you know, do it again. I think this is really valuable.
Done.
Thank you, everybody, for joining as well. This is terrific.
Much love, everyone.
Thanks, Alex.
Let's make a
Thanks,
dent.
Stephen.
Let's make a dent.
Thanks, Michael.
Mwah. Ciao.
Big 2022.
Yeah, baby.
Bye, guys.